Welcome back to the Clone Real Estate Podcast. I'm your mortgage broker host, Taylor Atkinson.
And I'm your real estate agent host, Matt Glenn. What's shaking today, Taylor?
Awesome news this week. As expected, Bank of Canada cut its rate by 50 basis point or 0.5%. What that means if you're in a variable rate or adjustable rate mortgage is your payment will reduce about $30 per $100,000 of mortgage amount that you have borrowed. If you're on a fixed rate, it does not affect you whatsoever.
Yeah. It does affect in the future, though, right? Aren't the bond markets predicting the future of the interest rates?
Yeah, we're seeing that inverse yield curve shrink a little bit. So we basically want those to be closer together, which means, variables got to either come down more or fixed has to kind of go back up. So if variable keeps trending downwards and following fixed, then, we're moving in the right direction.
So how much difference is there between variable and fixed now?
Depends if it's insured, not insured, rental, whatever, but we're still seeing about a % gap.
Damn.
We're getting there though. If we see another, next rate announcement's December 11th, and if we see another cut then we'll be definitely within.
It's kind of nice to just cut. It's kind of setting 2025 up to be a good year for real estate, eh? So what do you think?
Yeah, we're finally back in that range where people now are starting to have the choice again between fixed or variable. Before it was just you were stuck on fixed because that's all we could qualify people for with the stress test.
It's kind of funny when the market was going up, everyone was stuck on variable.
Yeah. It's not nice of the banks to force people into these products. But we're finally getting back to that neutral zone where people have some choice. They have more flexibility. So we're still not really qualifying most people on a variable just yet, but we're getting there.
It's kind of funny when you think about this, just making this up right now. But if the variable and the fixed are on the same, kind of means that we're in a pretty balanced market.
Yeah, and I don't think we ever sit on that very long. They kind of swing past each other. Fixed is always like the smart money, so that's kind of the direction it's going. So when fixed starts to rise again, you would expect that variable would swing and start to follow it. Well, today's guest we had on was awesome. I've been trying to get her on for quite a while. Huge into data analytics across Canada as a whole for real estate. So Wendy Waters, she has 20 years experience in real estate research, 18 years with GWL Realty Advisors. She is also on the management committee for Urban Land Institute, and she's on the board of directors for UDI, or Urban Development Institute. She just has some amazing knowledge. So basically she manages or gives advice for Canadian pension funds to invest in real estate across Canada, mostly in multifamily and commercial space. So really, really good show. I loved it.
It was one of those shows where you and I, well, in this episode, mostly you, just keep on firing question after question after question. And then it's just I could just keep on doing this all day. So many interesting answers.
Selfishly, I just wanted to be off air. Tell me where to put money, Wendy. What should I buy?
Yeah, I want to do what you're doing.
Yeah, being part of her team and seeing, the macro and micro, where to invest and geographically and asset classes. I saw her speak at one of the UDI events in Kelowna, actually. And they are tied into the provincial and federal government in the sense where they give feedback on, policy changes and grants and stuff like that. So really, really interesting person, and get on following her on LinkedIn because she puts out some really good content there as well. But I think you guys are going to love this show.
Yeah, it was a fantastic one. It was a good one. This episode, like every episode, is sponsored by Century 21 Assurance Realty, best brokerage in BC, in the interior BC anyway. We're in Kelowna, Kamloops, Seminar, Vernon, Castlegar. Heading out further east in the Kootenays, we are everywhere that you need to buy and sell houses. So if you're an agent looking to join an up-and-coming brokerage that's already kind of set up, we're the brokerage for you. And if you're a buyer or seller looking for an agent, call up Century 21 Assurance Realty. Also, enjoy the show.
Okay, welcome to the show, Wendy Waters. Thank you so much for joining us.
Thanks for having me. Looking forward to a great chat.
Yeah. Well, we like to start our show just you connecting with our listener. Kind of what's your perfect Friday look like in terms of productivity, energy, what do you do at work, and kind of leading into the weekend, a bit of fun.
Yeah. Well, I guess my Fridays aren't that different from other days. I usually get up fairly early, around 5:15, and I have a spin bike at home to do some spin on the bike and do some yoga. And then I go and have a cup of tea and go through the business news of the day. A lot of obviously business news comes out of the Eastern time zone. So check into what's going on. Might check in on LinkedIn to see what the industry is talking about today, if there's things I should be aware of that may come up. Also emails, anything that needs my attention. So by this time it might be 6:37 here, but in Toronto, the people are fully into their workday. So do a check on that and then, try and plan my day and plan a commute. So today I didn't have any calls early morning. Sometimes I got to do a call from home before I get a chance to commute. Sometimes I work from home, but most of the time I come in. And so I just find it's a lot easier to focus at the office.
What is the office? What is your title?
What's my title? So I'm the Vice President of Research Services and Strategy at GWL Realty Advisors. So we manage pension fund real estate assets. We develop, we acquire, we manage on behalf of pension funds, institutional clients. We are owned by Canada Life, so we do some management for them as well of their real estate. And the research team, we try to make sure our clients are investing in the right assets in the right locations over the time frame that works for them, as well as help them understand some short-term expectations on what they can expect.
Yeah. So you're basically the brains behind the smart money, telling it what to do, hey?
Well, not just me by myself. I've got a team and then work with all my colleagues who are a lot of really smart people across the country. So it's coordinating a lot of brains is sometimes our job to make sure that our clients are getting the real estate they need, the returns they need. Pension funds use investment real estate to help pay out their unit holders, so their pensioners. So it's very important that we look after, this part of their investments.
Yeah.
So
I love it.
Wendy, what are the right assets in the right locations?
We have office, industrial, retail, and rental. So those are the four that we work into. The retail is primarily grocery anchored. So just needs of life. We don't have big super regional shopping centers. It's very much needs of life. The right assets, it's really a combination of what's the best locations, and it depends a little bit on the asset. Best locations, good tenant mix. Right now, a lot of the focus is on what your future revenue stream can look like. So, making sure that we feel like we can grow rents at least as fast as inflation is coming at us is a really important feature in whatever assets that we're recommending. And resiliency of those rents, because again, pension funds keep things for a long time. So you're needing not just, hey, it's full today and the tenants are paying great money and next week there's going to be something, or next year something new is going to open down the street and it's going to take all the tenants. We have to make sure we guard against that. So barriers to entry is also important for what's the right asset.
How's the office space looking right now? Is that kind of coming back to life after COVID a bit? Or?
Yeah, I think Toronto is really struggling for reasons that it involves a lot of new supply in Toronto combined with big companies relocating to take advantage of new ways that we're working, and then congestion and traffic and problems on that side in Toronto. So Toronto's got some struggles, but in the West
I heard they're getting a new tunnel.
Who knows? The transportation management plans in Toronto seem to change on a very regular basis, and we'll leave it at that. So don't quite know. I haven't heard the tunnel. Tunnel might be helpful. Yeah. But in the West here, back on the office question, Calgary and Vancouver have had some steady office absorption. Calgary obviously hasn't had much new supply for a while since the oil crash. So that office market's had to remake itself. Whereas in Vancouver, there's more office under lease today than in 2019.
Interesting. Wow. I didn't know.
Yeah. By under lease, it's just somebody's got it leased. They don't have it on the sublease market, so they're using it. We traditionally call it occupancy, but we're not talking about bums and seats. How many days of the week. It's just someone's got it leased and they don't have it on the sublease market. So they're using that space in some way. And COVID helped accelerate a change in how we work in terms of a lot more mobile technology, a lot less paper. If you're working with a laptop and you don't need 2 filing cabinets full of files per person, you don't need nearly as much space per person as when you have a desktop and a landline and filing cabinets and bookshelves everywhere. So the fact that we're more digital and mobile, that's creating a trend of reducing the amount of space per person. Which is what we're working through in terms of, companies move. Do they need as much space? If they're growing, they do, but maybe if they're not growing, they may not.
Yeah. Are you still seeing international money come into Canada with kind of recent policy changes with capital gains inclusion, or just like the amount of restrictions that have come out in the past year in terms of real estate assets? Is Canada still an interesting place to invest for overseas investors?
Yeah, I think, well, the distinction, obviously, there's some limits on foreign capital at the residential side, but there's not on commercial. So we have seen downtown Vancouver, some European buyers of a couple of assets on West Georgia Street. A couple of years back, we had also the Bentall Center going in Vancouver, going to U.S. capital. So yeah, this foreign capital is still interested in Canada in those commercial spaces, especially if it's a market where they don't already have anything there. So they don't have to worry about having too much in one market. Population growth, Canada is one of the fastest growing countries in the world in recent years. And population tends to drive real estate demand. And the more demand there is, the more resiliency of your rents. So it makes sense that Canada is on the radar screen for international capital. As you know, as I'm sure you both know, like transactions are very rare right now. It's still a pretty quiet investment market, but international capital, when the new office buildings on Georgia Street, what I heard, it was pretty much all international that was interested in it. I think some are seeing it as an opportunity to get into the Canadian market where they aren't having to compete as hard with local capital, which matters. And then obviously res has all its restrictions as well, but
yeah.
I mean, I guess you're getting the benefit of the currency exchange too. Like if our dollar's down right now and say the euro or US is higher, you're kind of buying an asset class that you want anyways, but at a discount on the currency.
Potentially.
Do you see that historically? Like when our dollar's higher, do we get less investment, or is it just purely based on the asset class if it makes sense from how the numbers pencil out?
By and large, a lot of the major Canadian assets are owned by the Canadian pension funds and the Canadian institutions. So we don't see that. I don't know if we see enough international capital coming in to spot the trend. It's a very good question what you asked. I'm not sure that we've seen a trend like, in 2007 when the Canadian dollar is worth more than the American dollar. At that time, I think everyone thought real estate was overpriced anyway. So they're probably, there wasn't a reason to come in. But it's a good question. I don't know if there's enough data to say that, but certainly the Canadian dollar right now in its normal state, probably assets do feel like a bargain to some organizations, I'm sure, because when they look at the price relative in their own currency.
Yeah. I guess maybe to stay on asset class a little bit before switching to kind of population or rents. And I know single family houses, they're not kind of your guys' wheelhouse. Obviously, it's a smaller scale. But do you see single family houses having a longer runway than some of the other, say, purpose-built rentals or densification of condos or anything, just purely because the cost to build is so expensive? We aren't building them. We're tearing them down. We're doing land assemblies. Like it just doesn't seem we're having a lot of starts on single families comparable to other assets. As like a pension fund, would you guys accumulate a lot of single family houses, or is that something you'd ever look at?
It's not something we've ever done. It's hard to get scale, and it's, single family rental, as you probably know, it's big in the US, but it tends to be purpose built, like they're building homes to rent. They started doing it in 2007-8 in the housing crash when there was just a lot of homes out there that needed a buyer and often had an occupant but needed a buyer. So we haven't had that kind of a crash in Canada, like where there's just whole suburbs that you could pick up, or at least neighborhoods within suburbs that you could pick up. So it's not something we do. Your question on, single family homes, like, obviously in BC, where right now, most municipalities, like most single family lots, you could actually put 4 to 6 homes on it if you were to take it down, which means the land price is going to get spread among 4 or 6 potential future owners. So that's obviously a huge upward pressure on prices. And if you wanted to have a single family home, now you're going to have to compete with that. The land price, is somewhat connected to what you can put on it, not just what's on it today. So certainly, I think not what we do at Realty Advisors, but just looking at the math there, we're going to probably see those prices go up, sort of a one-time jump, and then the price is the price of 4 or 6 units. Obviously we got an election going on right now. One party saying they might do something different, but some municipalities like Vancouver that did this ahead of time may keep that, just with the idea of having that more gentle density and a few more options for families in terms of the kind of homes that are available to them.
Yeah.
Are you just seeing like massive swings in your forecasting with all the different like rule changes, provincial, federal? It seems like we've all been kind of going through a bit of a roller coaster, but I can imagine from your point of view, it would be crazy.
The population side, certainly we're trying to model population in order to then get to modeling demand and, and even supply. There's changes happening there. But the immigration changes, especially non-permanent residents, some of those policy changes, they're happening rapidly. And even some of the ones related to new supply and what that could mean. So I would say it's been quite busy. So in less busy times, other organizations also forecast, so we can look at what they're doing. And right now it's been so fast that we don't have that. We have to just do it. We have to really be on top of it ourselves. We do our own anyway, but it's interesting. It's happening fast. Obviously the provincial election here in BC is going to be done in a few weeks, but the federal politicking until that happens is going to, I think, keep going. So it keeps us on our toes for sure.
Yeah. And I guess so at a federal level, that's where the immigration policies are changing. I guess we've seen more restrictions on student visas or families associated to those visas, or just providing visas after their schooling's complete. I did hear one argument from somebody recently that was like, student visas has never been an issue because it was set up as kind of a revolving door. So yeah, we may have, 100,000 students come in that year, but most of those students are going to leave. But I think recently we've seen like a huge population growth. I'm speaking for Matt and I, but we think that's obviously impacted the real estate market. What's your guys' take on that?
Yeah, well, what we had was COVID distortions. There's COVID distortions affecting every real estate asset class.
Yes.
Multi-residential rental is the one we're talking about here. So the COVID distortions with students was that anyone on a student visa in 2020 was counted as being in the country. Say you arrived, maybe you got it in 2019, you arrived, 2020, you could have gone home during COVID and done your schooling remotely. So you have that group that the way Canada counts them, as long as you still have a valid student visa, they assume you're in Canada. And in normal times, that would be true because you'd be going to university and of course you'd be in Canada. So we had that group that we think a lot of them left, but we don't have any exact numbers because nobody counted that. And then during COVID, new people got admitted to university, but the universities were online. So you had the fall of 2020, the fall of 2021, in some provinces, the fall of 2022, at least you had an option to be online. And so you had between 2 and 4 years worth of students who I think all showed up in the fall of 2023. Potentially. Now, some trickled in before that, some never left and they stayed in Canada because it was a better place for them to be. But that's where we had this double, triple, and in some places, maybe even a quadruple entry of students that wasn't very well counted. And that was a huge burden on, rental housing stocks in a lot of places. And in some cases, you also had the domestic flows of people, going to some schools in different cities where, again, they started at home in their own province, and then they had to show up in Ontario, or maybe they had to show up in Kelowna. And so adding to that, so we had international, we had potentially domestic students that went from their family home in their own home province to needing a rental apartment in their university town. So with students, we had a COVID distortion, which thankfully is done. There also was obviously more students being admitted. There were some problems with these public-private partnerships at certain kind of colleges where it's not looking like international students were really getting a good education out of this. So we had obviously some extra groups taking advantage potentially of this. But going forward, I think things are going to normalize. The provinces are getting to control where their quota is going. I suspect in British Columbia, it's going to be, the University of British Columbia, Simon Fraser, UVic, and by UBC, I also mean UBCO, like whatever they control, are going to have most of those spots. And then over time, students graduate, they either convert to a temporary worker, they can convert their status, or they go home. They might apply to come back to Canada, or they might never want to come back to Canada. But the number of students will start to be steady, and it's going to be trending down because the government has reduced the number that can be here. But we're already seeing it on a very slow slope, but it is going to be just a very slow slope down of total students. So,
and that will obviously ease some pressure in the housing market. Like that's kind of
I think
why
we're already
they've come out
seeing
with these
it.
policies.
Yeah, I think this fall we already saw that there was not, there was just a normal entry of people starting university, coming for a master's degree. There was not this triple or quadruple entry of people. So we're already seeing it, I think, as if you look at the rentals.ca, which is just whatever happens to be available for lease that month. But it's been trending down in a lot of the major markets in Canada, I think Kelowna as well. The top of the market rents are not rising as fast, or in some cases are coming down in the brand new product. So we're getting a more normalized population flow now, which is good. And as that data gets out there, I think hopefully maybe political announcements will slow down because everyone can relax a little bit and just let everything play itself out now.
Yeah. I guess selfishly, so I'm actually looking at a student housing rental complex as an investment. Do you guys like that asset class? Kind of circle back on asset classes? Or do we see like with these recent policy changes, maybe there's more risk associated to that? Yeah. Can you kind of tell us a little bit, or me just, should I buy it or not?
Yeah. So we're obviously not in that asset class. We do purpose-built rental. We obviously serve a lot of students in our rentals. So we do track what's happening in the students. They do matter, and they matter to the overall market. But as for the purpose student rental, it depends on the market, how much is out there and where students are going. There's a lot of international interest in student housing in Canada because Canada is very undersupplied relative to a lot of the other, say, European, US markets. There's not very much purpose-built student housing in Canada. I do not know the Okanagan situation, but it would not surprise me at all if it's pretty much the same, is that there's not a lot there. University of British Columbia claims they're building a lot. They operate a lot. Apparently, they're Canada's largest operator of student housing, including some in the Okanagan. So I don't know quite what that supply is relative to demand. I still think it's pretty small relative to the total number of students that are out there. Yeah, so you said, well, it's not an asset class we're in. It's certainly an intriguing asset class because of just the number of students that need housing. And a lot of the universities only provide the housing for first and second year. So if it was catering to the third year students, fourth year students, it seems like there's probably something there.
Can I ask why it's not an asset class you guys hold? Is it just like internal policy for pension funds to like, these are our asset classes, or?
Not at all. It's, I think some of our clients may with other managers have some, but first it's an operating business as well as a real estate play. And obviously, multi-residential rental is somewhat of an operating business, and it's one that we understand. You need scale to be in an operating business because we manage, we're fully vertically integrated. We manage pretty much everything that we own for our clients. Yeah. So we have property management, leasing, everything. So that's why student housing doesn't quite work with our model right now, because we don't have any other ones. And so to only have one is very inefficient. Now, if you are an individual investor, there's someone who's got a platform and they just need some capital in there where there's a managing partner who has the expertise, for an individual like yourself, that could be obviously a very compelling idea. It's just not typically what we do.
Yeah. Okay. Good to know. Obviously, purpose-built rentals they seem huge right now, at least in Kelowna. Like everywhere we're driving around, massive structures going up. We're looking at probably 2,000 to 3,000 units. That's just me meeting with a few developers. Do you guys have data I know there's a housing shortage, obviously. It seems like this is almost like a new asset class that people are interested in, although this has been going on forever. And we saw probably a bigger build in the 70s and 80s. There was a lot of these apartment buildings, and then it took a lull. Why did it take a lull, and why is it kind of picking up speed now with MLI Select and all these things?
Yeah, so it took a lull around the time the Strata Act came in, so you could build condo and basically individually sell apartment units as opposed to having one owner for the entire building. So that was, the 70s into the 80s. Also, there was some different investment programs in the 70s and 80s that contributed to being an incentive to build apartments. So yeah, we didn't build purpose-built rental really right through the 90s into late 2000s in cross Canada as just a general statement. So that we've had a huge shortage. There's a huge deficit, especially just that sort of that middle, we've got new and then we've got really old and we don't have a lot in between, which is typically, you have a nice spectrum of housing for renters, which we're kind of missing right now. So why now? One of the reasons is it's been really hard the last, say, 18 months for condo builders to get the pre-sales that they need in order to get their bank financing. In some markets, there's an easy option to flip to rental. You can go back. There's not a lot of difference from the city's perspective, which one you're doing. In some markets, there is, this is a rental sites, or they look at rental versus condo. So that's one reason is condo is harder to do. So they're pivoting. There's a lot of demonstrated where the rents can be in our app, which helps with pro formas. Whereas for a while, when we didn't have new purpose-built rental, everyone was looking at the CMHC rents, which tend to be older and it's the in-place, and the markets with rent controls suppress those rents. And so you say, well, geez, if I can only rent that unit for $1,500 or $250 a foot, I can't afford to build it. Then you realize, well, that's a rent-controlled unit. Now that you can see that others are able to make it work, it helped to show that, yes, a group of renters who are quite happy to pay for really good quality units with a really good experience, nice amenities. And so that's been proven out. And that's also helping to encourage investors to go into rental. And some cities have density bonuses and, there's other things out there too.
You put a really interesting post out on LinkedIn the other day. I think it was per household now. I believe it was specific to Vancouver, but per household, the average of having income over 120,000 household. Was that correct? 120,000 has been increasing substantially. So there's a missing asset class where those higher income earners want to rent and that's not on the market.
Yeah, what the post was, it was just looking at where people who make, and I can't remember which income bracket I used, but 100 or 150,000, where they were renting. I think I put one out on there, and a lot of them are in older product. So it's also a way of saying that there is demand. Not all of them are going to want to pay new product rents, but a lot of them will, because we also see in another post I put out on LinkedIn is who rents the new product. So we can look at, the census gives us something called the 5-year mobility data. So where were people 5 years ago? Where are they at the day of the census? And if we look at just for people who are living in new rental, whether it's condo or purpose built, the census doesn't distinguish, but you can see where they were. And over half of them were in the metro area. And most of those were actually in the CSD, the actual little city immediately close to where they're living today. So you can see that higher income people, they move into the new product. So if you're building new product, it's not just for internationals or something like that. It's actually people local who choose to move to that new product, because chances are they had a home. They were already living in the region 5 years ago. They had a place they were living. They're making a choice to move into this new product. It helps show what is also called filtering, where they then are moving out of likely a cheaper unit. And then somebody who needs something less expensive, now that's vacated. But until you create that room at the top for the higher income people to move up, you end up without some product for people, more medium incomes to rent. And that's one of the challenges we've had, is there's been nothing. And then, the middle income was getting bid up by higher income earners. And then the lower, what used to be maybe typical rental for people maybe on lower incomes, got bid up by the middle income. And the people with very limited means ended up on the street, which obviously is a real tragedy and a huge problem. So we need the rental units at the top to just help move everybody along. Ironically, it creates other price points at the lower price points in the spectrum, which is obviously needed by a certain spectrum of the population.
So basically, new product of all types helps everybody.
New product helps everybody. Yeah. And enough new product all in one area, and the rents stop going up in that new product. Supply and demand does work when you finally match demand with new supply, which has been hard to do in Canada because we haven't been building enough.
Yeah.
Are we on track, or what's your thoughts on that? Are we ever going to get there? Or are we just always going to be behind the 8 ball with this?
Well, obviously, if you look at the, CMHC, and there's different groups that have how much housing overall Canada needs, because it's not just rental. There's also obviously that spectrum of first-time buyer product that's going to pull some people out of rental and make room for other people. So we need somewhere between 3 and 5 million homes, depending on what your affordability is and what you're trying to achieve. But we need a lot of homes in the next decade, 5 years, decade, depending on whose study. Are we going to get there? Probably not all the way, but I think, the cliche about, shooting for the stars and maybe we get to the moon, anything we can do, any housing that gets added helps.
Yeah.
It creates for somebody. So anything that unsticks housing helps make it possible to build more housing does help. And so even new condo designed for first-time buyers, that helps rental. That creates rental spaces.
Can we talk a little bit about rent control? And I'm thinking of, if we're talking about a newer asset class being built for rental, they move out of the more affordable, apartment building to say this more expensive one that opens up that affordability. But that's really the only time a landlord can kind of capitalize on a fair increase in the market, because otherwise we're capped at, CPI plus government allowance in BC and Ontario, but we look next door to Alberta and they don't have cap on rental increases. Do you know kind of the spread on, I know rent's been increasing in BC, but it seems like it's really kind of plateaued in Kelowna at least. Do you know the true increase on rent that's been over year? Because if we're just looking at a rent cap, it doesn't really reflect some of the increases that we've seen for renters.
Yeah, because obviously the CMHC, it all gets blended. Most people don't move in a year that are in typical purpose-built rental housing. And so you get increases on anything that turns over. And we've actually had a declining turnover rate. So that means it's very hard to measure how much rents are going up. And it's going to depend on the neighborhood. It's going to depend on the building, obviously how long the previous renter had been in there. There's so many variables. So do we have an accurate number? I think CMHC rents overall were, they were up a little bit more than normal last time. But of course, it's almost a year old, the data. I believe it was 8 or 9% in some markets. But rent control it creates a huge amount of distortion, because you end up, people stay in units that they probably shouldn't stay in. It doesn't suit them anymore, but they stay because the rents are cheap. It doesn't allow other people to move into those units. You end up basically with the long-time residents whose incomes have gone up. they stay in the old units. And then it forces people who are starting out their careers to end up in the new units, which cost a lot more. So we get a lot of distortions just in terms of equity and fairness in society from rent control.
That's perfect. That's kind of what I wanted to ask. Like, do you feel rent control works for fairness in society from both sides, from landlords, from tenants? Like, I'm just thinking Alberta seems to have some, I don't want to say affordable, but price compared to BC, their system seems to work much better and there is no rent control. So is that not a proven model?
Yeah. I mean, it's great to look at the Calgary data because on the CMHC, when you look at average rents over time, in places like BC and Ontario, which have rent controls, basically rents only go up. In Calgary and Edmonton, rents go up and they go down because rents are always at market. The CMHC rents and the market rents are pretty much the same thing in Calgary and Edmonton. Whereas in Vancouver, we're always talking about, well, CMHC rents might say a one bedroom is $1,500. Just try to find a one bedroom for $1,500. The new rents might be, $2,500. And you don't know where are rents. But Calgary, rents go up, rents go down. CMHC and market rents are the same. And what's really interesting is when the economy starts to boom, rents go up, developers all go build rental, probably build a little more of it that's needed, but that also works for renters because then, it's a boom and bust market. And when the economy starts to contract and people are losing their jobs, rents typically go down because there's a little bit less demand, and so they go down. And so it works for renters when you think about it. When their incomes are rising, rents go up, and when their incomes are falling, rents go down. So it's a much more balanced and equitable system for everybody. Now, it's a little bit, a little tougher. If you're an investor, you got to be ready to ride both of those waves. But in general, you do better. As an investor because rents can move to market when the time is right, which you can't do in other markets. You have to wait for a resident to move. Yeah.
You're on the board of UDI, right?
I am.
Okay. Yeah. I saw you at an event, I think a while ago. And so it just registered for me. I know you guys help communicate a lot, like at a provincial level, a lot of this data. Is this something that's been brought up to BC province saying like, hey, maybe rent control, the way we have it set up isn't the right thing?
Oh, for sure. UDI did have a recent letter to Ravi Kala on pointing out some challenges, also to try and get more rental built, because ultimately Urban Development Institute is about trying to, it's really home builders and other commercial builders as well, but it's about getting buildings built. But also Landlord BC, which is the Association for Residential Rental Property Owners, they do some advocacy. The challenge is once it's there, it's how do you unwind rent control? In BC, it used to be CPI plus 2, which I think when you started this conversation, we were talking about, it used to be that rent guidelines was CPI plus 2%. But in the last maybe 4 or 5 years, in about 2018, it went back down to CPI only, which is very low. And that's the overall CPI. But a lot of the operating costs on buildings have been going up much faster than CPI, so faster than inflation. Incomes in most cases, a lot of going up faster than inflation. So, but rents have been tied strictly to CPI. And then there was 2 years during COVID when they were frozen at zero. The Landlord BC membership, which is a lot of smaller landlords with these older buildings, and they've been really struggling because operating costs have gone up more than inflation, and their rents, if you look on a 4 or 5 year basis, have only been even allowed to increase. Hopefully they've had some turnover where they've been able to get a little bit more revenue in, but it's really creating some challenges in the rental sector, what's been happening the last few years. Yeah.
Do you still like the BC market because of the tenancy board, the difficulties that we face in rent control? I guess just, does it come down, like, to oversimplify it? Is it supply and demand? We don't have enough housing. We still believe in the BC market.
We still believe in the BC market. I think our clients do. We really do like the BC market. The rent control, it's moved back up. We really like having new supply and, having new purpose-built rental in this market. That's what we believe in. We've got development sites. So we've opened 2 new buildings in the Vancouver market since COVID, one on Robson Street and one on just off Lonsdale in North Vancouver. And we've got more development sites on Robson Street. We've got another development site in the Lonsdale area. And we've also got another one in the downtown peninsula. So we do believe in this market. We really do like that experiential rental, very well amenitized, great walkable locations and high quality. So we definitely like that. We still believe in this market. Newer rental, you obviously can get your rents right at market when it gets leased out. So we still believe in this market. I think, buying an older rental, there's opportunities and challenges in that, which every building, you just work through it. There's definitely opportunities to invest. The inequities are more from a renter perspective. There's challenges for renters that I was talking about earlier. But as an investment asset class, still like BC, still like the asset class nationally. We have a very large rental development pipeline nationally. So just having some best in class real estate, we believe in this market. Lots of renters, renter incomes are going up. They're not buying as often. The percentage of renters in Canada is going up. We do like this asset class long term. It's the right assets in the right locations. And you can say that about every asset class, but rental in particular, right assets, right locations.
Yeah, I kind of have to ask now, like as a smaller investor, we look at buildings that have been sold. Obviously, like they're fairly large buildings. Vancouver's a perfect example of like, wow, that sold at a 2.8 cap. Like, who is buying that? And I'm thinking maybe you guys are buying that. Maybe you're not. I'm putting words in your mouth, but like in terms of a cap rate, do you guys have like, we won't go below this kind of cap rate? It has a cash flow, or for institutional pension fund type money, it's such a long play, mostly on like appreciation, that you guys are willing to go after those type of asset classes?
Yeah, I think cap rate, it can be a somewhat problematic measure because a lot of buildings, when they trade, when any building actually trades, but in residential trades in Vancouver, yeah, the cap rate looks low, but it's being traded as a covered land play. So it's a future development site. So that could be one reason why a cap rate is going to be low. But with any building right now, it's all about the future revenue stream. And so you might go, with any asset, you might see someone buy something that seems a bit low on the cap rate, but if rents are substantially under market and there's an obvious path to get them there, residential rental is a little more challenging, but you could still see a path to get there. Some groups do, but other types of asset classes without rent control, you might say, yeah, when these leases expire, we're going to move them back up to market. So it's all about that future revenue stream is really where pricing is at right now, is, how much are rents at market? Are they below market? Are they above market? That would be problematic for a low cap rate. But that's what investors are looking at, is that future income stream and the reliability of that future income stream.
Okay. Airbnb legislation, how has it impacted current rent? Obviously the window on data is very small and it probably isn't even out yet, but has it achieved provincially what they were trying to achieve by putting more units on the market?
Well, one of the challenges, like obviously some markets like Vancouver have had Airbnb restrictions for a number of years. The province-wide one is more recent. We've been talking about how rents have stabilized. Some of the rents in the top of the market have come down a little bit, especially if you look at rentals.ca. I think Kelowna is off like 5 or 6% year on year in rentals.ca, which is whatever's available. So it's coincided with rents coming down. I think it's a stretch to say it's caused rents to go down, because I think ultimately it's about population. Population has been easing as well. We didn't have the triple entry of students. And also we didn't get into, extra entries of non-permanent resident workers as well in there. So is it making a difference? It's obviously in there. If you add a few hundred formerly Airbnb units into the rental supply, that's going to make a difference. But it's hard to say because there's so many other factors that are stabilizing rents right now. New supply, easing demand growth. Short-term rentals, they can be problematic in terms of how a city's planning. So I do get some of the policy reasons for thinking about restricting them. But I think the research is so-so on what they actually do. And the problem is that you don't run a perfect experiment. Rents are coming down for other reasons, right?
Yeah. Yeah, I know. That was a tough one to finish on.
It is a tough one.
Yeah,
it's a tough one. And I know Kelowna is a hot button issue. I do know in Kelowna because, these rules changed after people had made some investment decisions. I feel for them. At the same time, I do sort of feel for the city planners, the provincial planners, thinking like, if we're building a condo tower, we're thinking that this is housing towards our housing needs in Canada. And if they're being used as hotel rooms, that's, a challenge. So I have sympathy for the quick change and the retroactive change that hit. Cities across the world are having to get a handle on what to do about, how to manage this in a way that works for everybody. So I do have sympathy for people in Kelowna, because I do know there was some buildings really being sort of financing the idea that a certain number of units were going to be Airbnb.
Yeah, it's a complex issue for sure. Okay, well, we'd love to kind of go into our wrap-up questions. If you could buy one property in the Okanagan in the next 12 months, what would it be?
Well, me personally, so this wouldn't be an investment. I'd probably get something like at Silver Star, because I like to ski and I like to cross country and downhill. So actually, I'd probably buy Sun Peaks, but if I can't buy Sun Peaks, then I'd go to Silver Star. So.
Nice.
I'm at Big White right now.
Yeah, Matt's
Okay, there
recording
you
at
go.
Big White right now. So.
Yeah, okay.
But Silver Star has Sovereign Lake and stuff like that. So if
Exactly.
you're into
It's the better cross-country trail. That's why. I mean, Big White is lovely for downhill skiing, but not so good for Nordic. So that's why I would have to pick one. In
terms of an investment, could we ask a favor and pick your brain on that? Or you can just tell me off air so I don't have competition.
Yeah. Okanagan investment, I have questions. I have been to Kelowna for a while. Fast growing place. I think it grew by 4.3% last year, population. So population growth drives real estate. If you want a lower maintenance one, I take a look at, is there any small bay industrial that makes any sense in terms of its location and its condition and the renters? That's probably an asset class I'd take a look at as a small investment. I'm not talking institutional, I'm talking personally. What would I look at? I'd probably take a look at that. Institutionally, we have 3 shopping centers in Kelowna, so we like that market as a place for needs of life oriented retail. Again, population growing and, people, need to shop.
Okay. I love it. Thanks.
I love it too. All right, Wendy, if you could give your 20-year-old self any advice, what would it be?
So my 20-year-old self was in the early 1990s, and it was a tough economic time in Canada. It was a tough time in the world. The Cold War had collapsed. No one knew what was happening. There was a lot of uncertainty. So I think it would be that all this confusion, the world turns around and goes on a pretty good run after we get through the real doldrums of the 1990s, as well as Canada. So it'd be to hang in there and just wait. Things are going to get a lot better, for other people around the world, for the economy, for Canada. So that's what I would say.
Yeah, that's good advice.
I like that.
What is your favorite charity, or how do you give back?
With all the turmoil in the world, Doctors Without Borders, Médecins Sans Frontières, so MSF. And then locally, I usually give a fair amount to the food bank. And then we have a United Way program through Canada Life to donate off paychecks. And I'm fairly generous with that one and let them decide where it's needed in the community.
Nice.
All right, Wendy, how can Taylor or I or our listener help you? What can we do for you?
What can you do? I think follow the issues. You can, see what I'm posting on LinkedIn. Get involved. We need more housing. So how do you help your neighbors understand we need more housing, that it's going to be good, more neighbors, diverse neighbors. It's all good. And we need immigration. Like there's a lot of anti-immigration starting to come out. But actually, if you look at employment growth over the last, 20, 30 years, Native Canadian-born people, like the number of employed Canadian-born people has stayed flat. It's all based on immigration. So our economic growth, our employment growth, everything we can do in Canada, healthcare workers, everything is coming from immigration. So don't be quick to blame immigration on our housing policies. We need immigration. Our housing issue is from lack of supply. So I would encourage listeners to keep that in mind.
Interesting. Yeah. So you think the immigration numbers we have right now, you like them? Are they too high or too low? Or?
Obviously, we talked about some of the challenges with non-permanent residents, and some of that is right idea not being executed perfectly well. So that needs to be fixed. Obviously, students that are not learning, that's a problem. Any non-permanent residents, like worker that's being exploited, that's got to be dealt with. But in terms of the permanent residents coming into Canada, somewhere in the 400 to 500, which is, we're over 40 million in Canada now. So traditionally around 1%. Growth from immigration has actually been the norm. And so a little above that, we probably need to be there. If you look at the retirees coming up, the baby boomers are retiring in a very big way, and they're getting older. The top end of them are getting older, going to need a lot more healthcare at the end of your life. You need a lot more healthcare. So I think the permanent residents, yes, obviously making sure we're especially inviting people that have skills that we need, whether to grow in construction, construction trades to help grow our housing, because we don't have enough people to build the housing, but also where we have big gaps in our needs, and healthcare would be one of them. So, as long as there's some management of inviting people in who we really need to help us out in Canada.
Awesome. I like that.
If people do not follow you on LinkedIn, definitely recommend it. You put out some awesome content, so appreciate that. Well, thank you so much for joining us today. And sorry, we were just peppering you with questions. We could have done 4 episodes with you, but
Thanks a lot.
It was fun.
Awesome.
Okay. Yeah. Thank you.
Thanks so much. Appreciate it.